market conditions accelerating on the bearish side. Bearish in this bull market currently. We're seeing that rank at 26.35 and continuing to move lower. We're seeing some aggressive selling this morning in futures, and we've seen a pretty nasty day here the last couple of days. Momentum down, back down to that extreme side. See another extreme day here today. Also seeing breadth moving back aggressively to the downside, and then we finally seen the sentiment indicator really start to crack right here, where we're starting to see some movement. That we're definitely seeing some fear come back into the market, and that is appearing to be accelerating here. If we look at the buy-sell ratio, that has crossed back again to negative or less than 1.42, and we're seeing some aggressive moves here in bonds, and we'll talk about several of these chart patterns here. But this top chart right here, this is a VIX, which is that fear indicator, seeing a really sharp move here, and that is definitely a sign that we're seeing some panic selling and some rotation, certainly out of equities. We've seen S&P 500 now. Looks like it's going to gap open this morning down here in this range, another 3% drop. So we're back down to a pretty significant support range, and also see some extreme to the downside. We potentially could see some kind of a relief rally after a pretty deep gap lower, but it's certainly not worth trying to pick up anything aggressively at these levels. Let's jump back here and take a look at some of these others we've been talking about. We've been talking about Russell 2000. It just got pummeled here the last couple of days as well, and back to support as well. So we're seeing most of these indices pulling back now after the breakout and pulling back to some of these support areas. So as I say, we could see some kind of a support area once we get some kind of a capitulation sell-off. We saw the fear is happening in the bond market. We're seeing the bond markets just rally 3%. That means rates are coming down, fear of recession now. And this is not surprising. We've been talking about this for 6 months now. And this is what the double-edged sword that the Fed's dealing with is the inflation issue by not cutting rates because inflation is high versus a recession. And now we're going to be right in the heat of all of that drama. And TLT having a sharp move higher, SHY short-term bonds also moving higher aggressively. Now remember, what we're dealing with is this chart pattern right here, this bond yield curve. Okay, this short end of the yield curve has got to drop. So we're seeing bonds now drop aggressively, particularly that SHY, which is the short end of that yield curve, rallying, which means those short end, the bond market now is anticipating that the Fed is going to and have to cut interest rates to get this short end of the yield curve lower, particularly if we're dealing or talking about a recessionary environment. That's really what the market now is starting to panic about. Let's look at sectors. We're seeing a few areas of sectors that are working. You're seeing healthcare, real estate, utilities. IYH is the symbol here on that 6-month time frame. Actually had some momentum back up here in some of those sectors. So we're seeing where money is holding up. We're also seeing it stay in real estate, again, because interest rates may be coming back down. That may bode well for the real estate market. So you're seeing that also hold up that sector. We're also seeing utilities, which is also holding up. We also saw consumer goods also. So really those four are leading sectors currently and you're seeing some rotation out of back into those consumer goods as you're seeing some fear in the market start to take hold. If we take a look at commodities here, we haven't seen a whole lot. I thought gold may have moved aggressively, but it actually was kind of had a down flat day right here, still sitting in that upper location, potentially looking for a breakout on gold, still holding that momentum zone right here and running into some resistance. This is really long-term resistance, essentially lifetime resistance, because these are all-time highs for gold. And if we get a breakout, could see some good follow-through on GLD. Silver, not quite as strong, still working on that counter-trend retracement, still in that downtrend area for silver. And then USO, which we also have been talking about here, having a pretty nasty move, also 3%, 4% to the downside. So lots going on this week in the market. And as far as allocation, essentially, pay attention to the direction alerts it's talking about. This means, bearish in a bull market. This means traders, investors consider trading bearish bias, raising stop levels on winners, selling losers, and potentially looking for bearish setups as well. If we jump over to muscle stocks, we've seen a few names here. IESC, that's in the computer space. I'd be cautious of anything in tech right here. Tile, which is Tile and Progressive. This is insurance, and it's had an up day slightly. So I'll be watching insurance right here, a lot of these names, and then even real estate. So Tile is in that real estate area in the home furnishings location, and up 5% on a pretty nasty day from the other day. So there are stocks that and areas of those sectors. Keep an eye on those particular sectors if you're looking to add into any positions. Continue to add into what's working versus trying to pick up anything that is selling off aggressively. That'll do it for today's update. Everyone have a fantastic day today.